This TFMR podcast is brought to you by your friends at JM Bullion. Visit jmbullion.com for all your gold and silver bullion needs. Welcome back to your TF Metals Report podcast highlights for the week of June 12th through the 16th, 2023. A very busy week with inflation data and the June FOMC meeting. So we had a lot to cover at TF Metals Report, and this is just a small fraction of some of the things we discussed in our daily podcasts. At least give you a little feel for how things are working within the precious metals, what factors are driving the precious metals, and some idea where we go from here. Of course, one of the biggest factors driving the precious metals on an intraday basis each day are changes to the dollar index. And the dollar index has kind of an interesting chart. A lot of folks expecting it to go higher on the prospect of higher interest rates in the U.S., but the chart looks like it's painting a lower high and maybe breaking back down toward 101. Will we get some answers on this as we go through the week? Well, actually, we will. But on Monday, it was still kind of up in doubt, so that was one of the things we talked about Monday, June the 12th. All right, here's your dollar index. Like I said, up just a couple of pennies today, okay? Again, falling sharply last Thursday. That's all part of why silver was up so much and the open interest coming in silver last Thursday, because that big red candle, okay, wasn't due to the mine closure, or temporary mine closure, or that Newmont mine, okay? The dollar was down 80 cents last Thursday, and that's why silver was up 82 cents. Anyway, again, this is your main line. This is the one. Now, what does this mean? That means if the dollar was to surge tomorrow, Wednesday after the FOMC, and go above 104 and start going like a 104 and a half, we got problems in our hands. And it's probably because there's a huge surge in inflation above that 4.1 or 4.2% magical year-over-year number that we're looking for tomorrow. Or all the inflation expectations, or Powell's is ultra hawkish or something. On the other hand, if we just put in a new lower high, and we start breaking down below 103. I drew that line in purple here, so you can see how 103 has worked here for the last, really the entire year, or at least the last 6 months. We start breaking below 103 tomorrow and Wednesday, then we're going to feel pretty good about having higher lows now in on the charts. As you likely know, COMEX digital silver prices track the dollar index pretty closely. So that's where that falling dollar index is something we need to monitor. Well, COMEX silver looks like something we need to monitor as well. Could it have put in a higher low on the chart, establishing that good old-fashioned bull market pattern of higher highs and higher lows? It looks like that's possible, and whether or not that's going to be the case is something we'll need to keep monitoring. And of course, that was one of the things we discussed on Tuesday, June 17. In silver as well, again, if this is a higher low that we got a couple of weeks ago, then we need this trend line to hold just below 2350, around 2340 tomorrow, 2350 on Thursday. Break of that, and then it looks like we'll probably be testing those lows of late May, which is down here around 2280. Nobody wants that to happen. It'd play hell with the shares, which really didn't do that badly today. So we have to watch silver really closely. Very frustrating day today, though, especially considering that the dollar was down. Wednesday brought the latest FOMC meeting to a close with the Fed lines and Jerry Powell's press conference, where he tried to pull this rhetorical trick of claiming they were pausing their rate hikes, but doing it in a hawkish bent of 2 more rate hikes to come. It's all nonsense. It's all BS. And if it was actually the case, then you'd expect the dollar to be rallying, but it's not. Dollar actually fell on Wednesday and is threatening to break down below that important 103 level. That would be something we'd want to watch Thursday and Friday as well. But it was certainly all part of the discussion, an important discussion that we had back on Wednesday, June the 14th. Finally, then let's update your main charts. Again, this is the main one to watch. It has been for quite some time. Have we put in a lower high? Sure looks like it, based off this trend line. And now 103 is this key level, support and resistance in January, support in February, support mid-early March, and resistance from late March all the way into early May, and then now support again. As you can see, as it has taken out this 103 level line twice, And it has done so with a big, massive red candle. See that in early January and in late March? So both times it's done that. It's wiped it out with a big red candle. And with both times, within a couple of weeks, it was back at 101. This is what I mean. We are going to watch tomorrow and the reaction in the dollar, which is also a reaction to the euro, very, very, very closely. Okay? And then we'll figure out where the metals go from here. But it's not all just charts and chasing a dot on the screen at TF Metals Report. No. We try to keep track of everything because really, if you're going to follow gold, you've got to keep track of economics, monetary policy, geopolitics, politics, you name it. All of those factors influence gold prices. And so we keep track of the macro. All right, one of the ways we can do that is through the Fed's projections, as flawed as they may be. We try to see what the Fed is thinking so that we can front run them a little bit. Try to anticipate where they're wrong and where we can use that to our advantage. So on Thursday, June the 15th, we looked at some of the information that came out from the end of the FOMC on the 14th. That's the summary of economic projections. The Fed puts those out once a quarter, and it gives you some idea of the craziness and what they're thinking. And that was all part of what we discussed on Thursday the 15th. I want you to see this again. What I gave you yesterday was not a very clear picture. I'm not sure I described it very well. This is from the Summary of Economic Projections. The Fed puts this out, this SEP, at every quarterly meeting, March, June, September, and December. They update this once a quarter. This is from yesterday. Now, I want you to notice a couple of key things here. Let's start with unemployment rate. Their year-end projection of the unemployment rate is 4.1%. I will remind you that as of last month, it was 3.7%. So the Fed themselves is predicting a rise of 0.4% or more than 10%. 3.7 to 4.1, that is a more than 10% move in the unemployment rate by the end of the year. But then they're saying it's going to 4.5 next year. So they are saying that between now and sometime next year, the unemployment rate is going to go up by 20% from 3.7 to 4.5. And that's what that thing was yesterday that I showed you from Bloomberg that said never before ever has this happened, that you can get that rate of change in the unemployment rate and not have a recession. Never happened before. But look at up above. Change in real GDP. Look, the Fed, which has never predicted a recession, the first one they predicted will be the first one they've ever predicted, says GDP growth next year is 1.1%. So in the land of unicorns and lollipops where they exist, academia in their ivory towers, they think that the unemployment rate can increase by over 20% in a year, but yet the economy is going to continue to grow. After all the rate hikes, unprecedented credit card rates, mortgage rates doubling, these people live in fantasy land. Finally, all this talk about rate hikes, right? 50 basis points to come. You can see that down below. The March projection of a median federal funds rate, 5.1. Now it's 5.6. All job owning. And why does it not even matter? Look what the Fed themselves predicts by the end of 24 and 25. They are predicting right now 100 basis points of cuts next year. Another 125 basis points of cuts in 2025. Now, again, you can't believe them. They don't know what the hell they were talking about. Remember, they weren't even supposed to hike until 2023. But they're job owning this thing, trying to get as much out of this as they can before time finally runs out and they've got to cut. They're just trying to job own inflation and pretend that they're tough and all that kind of stuff. But they themselves are predicting 100 basis points of cuts next year. Okay? It's going to be more than that, and it's going to start before next year. You know that. But I thought this was a very important thing to go over one more time. And on Friday, June the 16th, COMEX Gold is going to finish the week down just a handful of dollars, which, considering the way that the week began and considering the events of the week, the CPI, the PPI, all of that nonsense about the hawkish pause from the Fed, to finish the week only down $5, not too shabby. So we'll head into next week with kind of an uneven schedule. The U.S. markets are closed on Monday. There's really no news Tuesday and not much economic news at all next week. The big event next week will be Wednesday and then into Thursday. Back-to-back appearances by Fed Chairman Jerry Powell. before the U.S. Congress. Talking about monetary policy, talking about where rates go from here. That will be the big mover and the shaker for the markets next week. And we'll see how things turn out. But for now, we dodged a couple bullets this week and end the week feeling pretty good, all things considered. Have yourself a great weekend, and please come back next Friday for another edition of the TF Metals Report podcast highlights.